What is going on, beautiful people? It's your real estate go-to, Deontay. Here, as always, with another reaction video where we're taking a look at what industry leaders, thought leaders, and everybody in between has to say about the real estate market to tie it back to what's going on in Central Florida. So today we have a video from Bigger Pockets, and I absolutely love Bigger Pockets. It taught me so much that I know today, especially when I first started in real estate. So this video is going to talk about home prices dropping. So let's see what they said. I haven't watched this video, so we're going to tie it back because if you guys didn't know, everything that goes on in regards to the news and when they're talking about homes, we have to keep in mind what region, what area of the country we are in to, take it with a grain of salt. So let's see what they have to say in regards to the home price.
Look at these charts, you see demand is down, but supply is also down because less people are listing their homes. I think this is really important for investors. If you are going to make an offer, want to get in this market, offer below list price. So today I'm going to share with you 6 charts that are going to help you understand what the heck is going on in the housing market today. Let's get into our graphs and data for today. All this data, I should say, is mostly back into February. I'm recording this in the beginning of March. The way data works is it comes in arrears, and so we have to wait a couple months. But we do have data through February right now, and I think the biggest headline, the most important thing that I'm seeing, is that the median sales price in the U.S. has declined year over year for the first time since 2012.
Now that is big, and for those of you who do not know, as of the recording of this video, of course, it's March 30th, the median price in Orlando is about $412,000. So that'll kind of give you a point of reference, and that is slightly below as well in regards to what we were experiencing previous year. So median price right now in the Orlando and Central Florida area is $412, just so you guys could know.
And this is really significant. And if you're sitting there thinking housing prices are already going down, they have been since June. Prices have been going down since June in what is known as month over month terms. That basically means from June to July they dropped, from July to August they dropped. And that is one way to look at the housing market. But the, in my opinion, better way to look at the housing market is in year over year terms, because and that basically means looking at February of 23 to February of 22.
I do agree. Looking from year to year gives us a much better, sample size and idea of data of what, and allows us to predict and see and forecast what we can expect from the year and kind of adjust. So I do agree with that point, taking year over year.
And the reason why that's so good is because it removes some of the seasonality. We always see prices fall from the summer to the winter. That's just called seasonality. It is normal. Usually it goes down about 4 or 5%. This year.
Fun fact though, if you are a buyer in a high competitive market, if you are in the market around November and December, those are very key months for you because holidays, right? And people take time off. It's a great time to slide in and get your offer accepted because you're going to face less competition.
Here it went down about 9%. So we've seen declines more than the normal seasonal average. And finally, all of those declines monthly above the average have really started to compound. And now we are seeing for the first time, at least according to Redfin's data, that year over year prices have declined. It's not by a lot, it's only 0.6%. But personally, I expect this to continue because this time last year is right before the Fed started raising interest rates, and we saw prices really explode between about April and June of 2022.
Correct.
And so I do think that personally, it's just my opinion, that year over year we're going to see further price declines at least for the next couple of months and maybe through at least the rest of this year.
Now keep in mind, hearing price declines does not mean the sky is falling, people. It does not mean the sky is falling. It is just getting back to what it should be. Those past two COVID, that COVID period in time that seems like it didn't exist and was in an alternate universe, that wasn't normal. So prices were sky high. So of course prices are going to quote unquote be falling, but they're actually getting back to what they should have been in regards to a natural, upwards curve. So don't be frightened when you hear that, prices going down.
So if this is just Redfin data, if you're familiar with like the Case-Shiller index, for example, which is inflation adjusted, Some of these things have already come down, but I'm using Redfin data today. I think it's really good, high quality data, and this is the first time we've seen that. So that is really notable. Okay, so for our second chart, I want to talk about demand, right? This is basically how many people are actively looking for homes in the housing market right now. And according to Redfin, they maintain their own home buyer demand index, which measures activity on their site, how many people are requesting tours, that kind of thing. Home buyer demand is down 24% year over year, which is really considerable.
I'm curious to see what his
People
thoughts are in regards to why. Well, let's see.
even during last year when prices were really high, a lot of people wanted to buy homes, probably because mortgage rates were super cheap and they wanted to take advantage of locking in, a 3% mortgage for the next 30 years. But now it has dropped 24%, and that makes sense, right? Mortgages at 7% are a lot less affordable. People can't afford the same size and price of house as they could a year ago, so people are leaving the housing market. Redfin estimates.
I do agree with that. So those interest rate hikes have been a deterrent, but the solution that I've been giving a lot of my people, especially in the Central Florida and Orlando area, right now, new construction. New construction is like the silver bullet. A lot of them are providing a number of incentives, such as providing, if not all, a majority of your closing costs, in addition to interest rates that are below what the market is yielding. For instance, there's a community in St. Cloud that has 4.87 interest rates, and they're giving you money towards your closing costs. So even though, the average rate is at about, I think last time I checked, around that 6.4% mark, there are opportunities for you to get into a brand new home at a lower interest rate, right? So it's all about the conversation and strategizing. But I do agree with what he's saying thus far.
It's about down 24%. When demand falls, you expect prices to decline. And we've seen prices decline, as I just said, by 0.6%. But they haven't fallen as much as people might imagine that they should fall, given that demand is down 24%, which is a lot. And the reason that prices haven't fallen that much is something that I talked about in my video last week. And I'll show you my third chart now, which is that new listings of homes are also down. Yeah. They're down 20%. Yep. Prices in any market, and the housing market is no different, are dictated by the availability of supply and demand, inventory, and how strong they are relative to one another. So in a normal market, if demand dropped 24%, but supply stayed the same, prices would go down, right? Mm-hmm. That means there would be more houses than there are available buyers. Mm-hmm. And the way that sellers compete for the few buyers that are out there is that they have to lower their price. That pushes down prices, mm-hmm, right? But what's going on right now is that in addition to demand dropping 24%, we are also seeing supply drop at the same time. Yep. As shown in this chart, you can see that new listings have gone down 20% year over year. Basically, what's going on is that in the housing market, unlike a lot of different markets out there, when you go to sell a house, you are typically, not everyone, but you are typically also a buyer. Yep. And so a lot of people are looking and saying, should I sell my house right now? I don't know, because when I go to buy a home, after I sell it, I go to buy another home, it's going to be super expensive. Rates are really high. So instead of selling and rebuying, I'm just not going to put my house on the market.
And that is so true. And especially the people, a lot of you who are viewing or who are getting ready to buy, your family's growing. So that is an issue. I'm locked in at a 3%, but I don't want to go to a 6.5%, 7%. That is why I strongly suggest these new construction products. It provides such an incredible incentive that it's something that you can definitely not only sell, but still get into a home that you want, that fits all your needs, and that is a good deal for you and your family. So if you're not into new construction, or you want to be in a certain area that does not have new construction, that is a problem. And that's, once again, what he's mentioning, the lack of inventory, because I got to move somewhere, and the places and the locations that I want to move don't necessarily have what I want. So in the Orlando and Central Florida area, a lot of the new constructions are in the St. Clouds, the Kissimmees, the Davenports, the Claremonts, the Sanfords, the DeLands, on the outskirts. So I can understand, especially people in your situation that want to be more central to to Orlando that can't take advantage of those new construction homes have to sit in place and kind of wait.
And you can see that that reflected in this data that new listings are down 20%. So in summary, if you look at these charts, you see demand is down, but supply is also down because less people are listing their homes. For the fourth chart is just another chart showing active listings, which is another measure of supply. It's just basically how many homes are for sale on the market at any given time. And I said supply. It's actually the reason I like active listings is because it's a good measurement of supply and demand, right? Because new listings, the one we just shot in chart number 3, shows how many new homes get put on the market. But active listings also reflect how quickly they are getting purchased, right? That's what active listings shows us. And as you can see, it's up about 20% year over year, which is a lot, right? That is considerable. And that is contributing when active listings go up. That is contributing to those price declines that we saw at the beginning of the video. But if you look at this chart, I think it's really helpful to see two things here. First and foremost, it is the same as 2021. Prices were going up a lot in 2021. And the inventory, the active listings is almost exactly the same. Look at those blue lines and the orange lines. They're almost following each other perfectly. So even the prices are probably going to keep going down. That is my opinion. But just so you see, they are still far below where they were in 2020, really far below where they were in 2020, far below where they were a couple of years ago. And so although inventory is going up, it really isn't at the point where you would think it would be given this point in the tightening cycle and during the business cycle. So I think that's really interesting. For prices to drop, inventory needs to go up. And that really hasn't happened yet. Of course, it could still happen. I'm not saying it can't, and it's probably going to go up a little bit over the next couple of months. But we would need to see a dramatic increase in price in inventory for prices to really start to come down. And that hasn't happened yet. So this is one of the things, if you really want to know what's going on in the housing market, looking at inventory, active listing, days on market, months of supply, those are all different measures of inventory. Excellent way to keep an eye on the market. If they start to go up, that is an indication of downward pressure on pricing. If they flatten out, if inventory stays flat, that probably means that prices are going to stay flat, or they might even go up in your particular market.
Now, also something to consider when we're talking about pricing and days on market that your house is. Marketing is more essential than ever when listing your home. We have to do as many as the thing as possible, like do our digital marketing, stage our home, do our pre-home inspections, right? Fill out all kinds of information to highlight the features that we've done and get our video, our Matterport. All the bells and whistles are essential for us to sell the home for not only the price that you want, but in the time that you want. Gone are the days you just throw it up with iPhone pictures and it sells 50 grand over. So even though the days on market are higher, there are variables and reasons why some of these homes that actually should have sold stay on the market. So it's essential when you are getting ready to sell your house, you're going to interview a real estate professional. Make sure that your house is positioned and marketed in the right time, right place, at the right price, to make sure that you're not one that's stuck on the market waiting for a buyer to choose your home, but you're creating a bidding war and getting the price that you want and selling in the time that you want.
For our fifth chart, I want to show you about price drops, because for a while, if you look at this chart, you can see throughout 2022 and in the beginning of 2023, the share of homes that had to drop prices to sell really shot up. You know, it started the year in 2023 at 3.5%. It went up to almost 5.5%, which is still not a ton of homes, but relative to 3.5%, you know, that's like a 60-70% increase. But what's happened over the last couple of weeks is it's actually fallen. This doesn't necessarily mean prices are going up or anything like that. What this tells me is that sellers are starting to get more realistic about what's going on in the housing market, and they're no longer putting up these ridiculous prices that were maybe warranted back, a year.
One of the quickest ways to keep your house on the market for an extended period of time is to price it incorrectly. That's the quickest way to keep your home on the market.
Year ago, but no longer are buyers really willing. So I think this shows that real estate agents and sellers are starting to get a pulse on the market and are better and more appropriately pricing their houses given what's going on in the economy. I think this will be really interesting to see if this starts ticking up again now that rates have gone up over the last couple of weeks. But for now, it's been falling, which honestly, I was a little bit surprised to see. For our last chart today, I want to show you that home prices, I think this is really important for investors if you are going to make an offer, want to get in this market. Home prices are now selling below list price. This is hugely important. If you look at this chart in all of 2021, and the first half of 2022, the average home was selling for above the list price, right? We've all heard these stories about bidding wars and dozens of people waiving contingencies and, bringing suitcases full of cash or whatever it took to get a property. And it actually peaked back in 2022 where the average home was selling for about 103% of the list price. And this is on a national basis. Now, fast forward to where we are now, it is selling below list price at 98%. And I think this is really significant for investors because one of the big pieces of advice I've been giving to anyone who's thinking about investing in the market right now is to offer below list price. Right now, we just saw all these different dynamics that are going on in the market show that we are in a buyer's market. And this means that the buyers have the power, right? Even though prices are going down, and that is something you need to be cognizant of and you need to mitigate the risk of, you do have negotiating power. And that's shown right here in this chart because the average person is buying home for 2% less than the seller is asking for.
Now, the caveat to this is the homes in the middle, yes, we have a lot more negotiation power. For instance, one of my buyers, we were able to negotiate a 3-for-1 buy down. And long story less long, what that is the seller provides us extra funds to buy down our rate. However, if you are looking for a home that is updated, has all the bells and whistles, you still will run into bidding wars. I have experienced it myself. Me and my client, we lost out on it. We offered over asking. We did offer to pay closing costs, and guess what? We still got beat out. So I would say in regards to what he's saying, offering below list price depends on the home that you're going after. If it's a home that has all the bells and the whistles and has multiple offers, I always strongly consider put your best foot forward because, in that scenario, you may not win out on the home that you're looking for if you're kind of trying to hedge your bets and start low.
So if you are concerned about home prices falling, which in most markets in the U.S. you should be, some markets are still flat and might go up, but a lot of markets have extreme downward pressure on prices and you should be cognizant of that. You can still buy in these markets because there are going to be really good opportunities, but you should be offering below list price. And as shown in this chart, sellers are starting to come to reality and come to terms with that because the average home seller is now accepting a price 2% below what they offer it for in the first place. All right, so those are the 6 charts I brought for you today to help you understand where the housing market sits as of the end of February in 2023. Of course, we are just starting to get into the interesting part of the housing market season. Usually starting, in around March or April, things really start to pick up in terms of inventory, in terms of demand, in terms of prices starting to go back up in a seasonal way. It will be really interesting over the next couple months to see if this normal seasonal patterns play out or if the correction that we're in and the downward pressure, the economic uncertainty that we're all facing changes the dynamics of the housing market.
So this was pretty good. Drop a comment in the comment section below. Let me know what you guys think about the Central Florida area or wherever you're from in regards to price decreasing and what you guys are thinking to take advantage of the current market. Whether you're looking to get a new primary home, secondary home, investment property, what are you guys planning on doing in 2023 to take advantage of the current market? I would love to hear back from you. And as always in real estate, there are only 2 people that could get you exactly what you want, okay? That's D and you. Talk soon, guys. Peace.